Stop!
You need to watch this before you buy a home. Buying a home is a very exciting but can also be a very stressful process. In this video, we're going to give you a rundown of the house buying process as well as a few tips that you won't hear anywhere else.
The mortgage journey starts a long time before you actually start looking for a house. The first thing that you need to look at is a deposit. You may need to build up a deposit for the purchase of a property. With most mortgages, the minimum deposit that you do need is 5% of the property value. However, sometimes you may need more than that. So you may actually need 10%, 15%, or even more dependent on your credit status. You also need to have an understanding of your credit report. Your credit report has a huge impact in terms of the mortgages that are available to you. So by understanding what's on your credit report before you start the mortgage journey means that you're in a better understanding of what lender potentially are available to you. It's also really important that you get your bank statements ready, so when you apply for a mortgage, the lender looks at your bank statements and sees that there's affordability for that mortgage. A lender will generally look at your bank statements over the last 3 months, so at least 3 months before starting the application process, you need to make sure your bank statements look great. And the final thing is to make sure you try and clear as much borrowing that you have in the background. The more borrowing you have in the background can impact the amount of mortgage that you get. So by clearing off that borrowing may mean that you'll be able to get a higher mortgage.
The next step is to find the right mortgage broker for yourself. It's so important that you find the right broker to see you through the house buying process. For example, if you have adverse credit, you want to make sure that you deal with a broker that has dealt with adverse credit in the past. If you've got complex self-employed income, make sure that you're dealing with a broker that knows your situation and has dealt with complex incomes before. Many mortgage brokers will say that they've got access to the whole of the market. Don't be afraid to ask that broker if they do have access to the whole of the market. If they don't at all, you might want to consider using another broker. It's very important to instigate contact with the broker early in the process. A good broker will tell you what you can afford, what your mortgage payments will be, and also tell you the amount of deposit you will require for that purchase. Once the mortgage broker has gone through the affordability options with you and also gone through your monthly payments, the next steps will be to go through a decision in principle process. A decision in principle is just a credit check with the lender to make sure you pass their credit assessment. An estate agent will tend to request a decision in principle prior to you making an offer on that property, so it's important that you get a decision in principle arranged. If you've not been successful with a decision in principle, a good mortgage broker will instigate contact with you in the future when they can help you. They will also advise you on how to put yourself in the best position to buy property in the future.
Once you've had your decision in principle agreed, now's the time to start looking for a property. So once you've found that dream home and you want to move forward with buying that property, the next stage is to start the mortgage application process. As Gindy's mentioned, once you've agreed the sale with the estate agent, you then need to start to liaise back with your mortgage broker. The documents that you normally need for a mortgage application are as follows. The first thing that you need is something to verify your identification. That could be a passport or a driving licence. The next thing the lender needs is something to assess your income. So if you're employed, ordinarily a lender will need your last 3 months' pay slips. If you're self-employed, the lender may ask for your latest 2 years' tax returns and overviews, or maybe your limited company accounts if you're a limited company director. The last thing that you normally need is bank statements. And normally you need 3 months bank statements to confirm your deposit, and you also need 3 months bank statements for your current account. Once you've supplied all those documents to your mortgage broker is then in a position to actually start the mortgage process. As well as gathering your documents together, it's also important to choose a solicitor. Choosing a solicitor is a really important job and shouldn't always be looked on a cost basis. Service levels with solicitors is so important. If you find a solicitor that is the cheapest and they give a poor service, that can really slow the mortgage application process down. So when you speak to a solicitor, make sure that you understand how quickly your application can be dealt with. Once all those documents have been received and you've chosen a solicitor, that's the point your mortgage broker can start the mortgage application process.
Once the mortgage application has been processed by the broker will pass a set of documents to the lender. The lender will then underwrite the mortgage application for you to get you the right decision and to get you that mortgage offer as quickly as possible. During the mortgage underwriting process, a valuation is also required. The lender needs to make sure that the property is of adequate nature and good security to lend on. So the lender would instruct a surveyor to go out to the property to make sure the property is of adequate nature. Once the lender has underwritten the mortgage application and also assessed the property, they will then issue a formal mortgage offer. A formal mortgage offer is essentially the bank telling you that they're happy to lend to you based on their terms and conditions. So your solicitor would also receive a copy of the mortgage offer. This means that they can carry on doing the remainder of their work. Now, it's important that you look at insurance at this stage with your broker. As part of your mortgage offer, you would require buildings insurance if you are purchasing a freehold property. A good mortgage broker would recommend a suitable policy for you that's also of adequate nature for the lender. It's vitally important that you also look at personal insurance cover for yourself. Now, that can be broken down into 3 categories: life insurance cover, income protection, and critical illness cover. Simply put, this is probably going to be the largest commitment that you ever have, so it makes sense to make sure that's protected for you.
So once you've received your mortgage offer and you've agreed all the protection with your broker, the next stage is for the solicitor to complete the last bit of legal work. Once all that's completed and the solicitor has liaised with the seller, they will then set a date for you to exchange contracts to purchase your home. Once you exchange contracts, you are legally bound to buy that property, and it's the stage just before the final bit of completion. Then, once the solicitor is ready, you can then complete and buy your home. And when you buy your new home, that's the point where you get your keys. The next step for that broker is to contact you and just give you all of the information around your mortgage. So it's really important that you understand when that first payment comes out of your account. The last thing you want to do is to miss your first mortgage payment. So a great broker will get in contact with you 6 months before your deal is due to expire. That's to make sure you don't go onto the lender's standard variable rate and pay more interest on your mortgage.
So there you go.
Some vital information about the mortgage application process.
Please check out other videos aimed at first-time buyers and how to get a mortgage.